morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room. On this segment, we're going to take a look at gold, silver, and Bitcoin, and we'll review the weekly reports provided by the robo-advisor, Nikki the Robot, and see what's happened so far this week. We'll be right back. Just stay with me. Let's take a look at the market here in gold. This morning, it's been a pretty volatile day with strong silver leading the way, basically. Gold is down about $3, back down into the buy one level here for today, which is about 1807. $18.14 trading last, down about 4. The silver market is the strongest market today that seems to be leading the way here, and it's completed all the targets here in terms of accomplishing the sell one level of 24.18, 24.19. 24.44 is the next level here, and we have taken some profits here. We've recommended my traders here in the Discord private trading room to do the same. So, but something is taking place here in the gold market by trading above 1810, which is the monthly numbers that we're taking a look at. $18.10 is still the average for the year that's going to remain, and even though we're rolling over into the December contract, this is going to remain. $18.10 is the average price of last year, and we're trading at $18.14. $18.14 is the daily average price that we see here today, with the weekly average price below there at $18.07. Right below there, you have the daily at $18.01. $18.01 $18.06 is the buy one level. $18.06 is the buy one level. $18.07 is the weekly average, and $18.14 is the daily average. So the market has been trading above the average daily, weekly, activated a buy signal from $18.06. At 6:15 a.m. yesterday, and we've been trading above the average since. The market trading above the average now has activated a bullish price momentum. When the market trades above the averages, it represents a price momentum. And the target automatically is activated of 1824, which is the daily target. The market trading above the weekly average of 1807 has activated the 1836 target for the week. So we are generating a bullish price momentum, and we have our targets in place on the daily: 1824, 1832, and 1836. Unless it closes below 1814 or even 1807, it would be a stronger bearish signal if we would activate that. But underneath right there, you're looking at the buy one level of 1806. And right below that, you're looking at the buy two level of 1795, and then the weekly at 1792. So what this intelligence is telling us is that the market is in a very strong level of support, and trading above the average price daily and weekly is confirmation that the price trend momentum is bullish. So you want to continue to hold your long positions. And if you've taken multiples and you came in long, the market gave you the targets pretty much to take some profits for the day, particularly in the silver market, which is what we recommended our traders here to do. We had a couple of strong signals yesterday. About 10:30 p.m., we made a low of about 2377.50 on the silver market, and we reverted from there. From again, what the AI recommends every time that you're in blue, that is a very strong area, that the probabilities are on your side to accumulate supply. That's the first thing it tells you by the market trading between these levels. Furthermore, if the market trades above it, on the first bar that you see here at 4:45 a.m., it activated a setup. And the setup is, it kind of knocks you on your shoulder and it tells you, hey, prepare, because if we close above on the next bar, we're going to get long. It's a buy trigger. And the buy trigger came in at 5 o'clock. When the buy trigger is activated, automatically the targets above are in place, are also activated. And in this case, 2410 was the first target, 2419 was the sell one level. The average price was completed right away. The sell one level was completed at 2419, and we're looking at the high so far is 2432, and we're looking at 2445 as your next target for today. Now, what this chart shows here is a perfect reversion to the mean. It reverted to the mean, and when the market trades above the mean, it goes up to the extreme above the mean. Now, one of the things that I want to put into simple words here is that another way of looking at the levels here that are provided by the variable changing price momentum indicator is that this area is the highest level of speculation on the short side. And it tells you, do not go short here. And in fact, expect to see buyers come in here. This is a very low probability to go short. You're looking at about maybe only a 10% to a 5% probability from buy one level to go short. So if you want to take, like I do, the highest probability trades, then you wait until the market reaches that level. And so in here, the buy probabilities are 90 to 95% on your side mathematically. This is not a guarantee, not to confuse it. We're talking about probabilities, okay? And then the market, the algorithm tells you, this is a written in C++ code, and I'm reverse engineering the easy language for you guys that are serious traders. I want to make a difference in the way that you approach the market. To be self-reliant, unemotional, and more accurate, mathematically speaking, than most systems out there. And then it's just a question of what you do with this information. And I say, this is like a GPS. I use it for my driving. And here it tells me buy trigger. You want to buy and your destinations are right above it. The first one is 2410, 2419, and 2445. And depending upon how you apply this intelligence, in terms of managing with size, or whether you go in futures, whether you go into stocks, ETFs, options. That's based on your profile. That application is based on your profile. We're talking about the signal for day traders. And so what we have done here is pretty much taken advantage of this situation. In my trading room here, as you can see, I do trade live. I execute the signals. I share that with my traders in my trading room, and I also document the trades. We went long at 23.93. The stop was 23.92. Our first target was 24.10. The same thing with the gold. When the target is completed, I post it. In fact, I execute my trades here live because this is what I use to apply and execute the VCPMI. Silver long, 23.92. The target, 24.10. 24.10 completed. 900% profit. 24.19 next. Silver is leading. 24.19 completed. So this is a phenomenal trading tool that essentially guides you through the most volatile markets, or the most volatile periods, when the fundamentals are completely the opposite of what's going on. And like we're looking at, for example, in this case, in relation to the gold market and the silver market, that we have one of the most bullish fundamentals that we have ever seen in this market, and yet gold is not adjusting relative to all the other commodities that have gained, 40, 50%. And or even the PPI or the CPI according to inflation. And so my feeling again here is pretty strong in terms of accumulating metals, gold and silver. What I want to do here is I want to take a look at the report that we published basically in Seeking Alpha for gold, silver, and Bitcoin. And we're going to take a look on this segment here and review the mean reversion trading report that we published in Seeking Alpha August 29, 2021. This was the gold weekly report. And basically, it told you that the weekly trend of 1799 was bullish as we came into this week. This is the first filter that we use in the application of this report. And it also identified for us that the weekly VCPMI, or the variable changing price momentum of 1807, was also bullish. Now, the first filter is the trend momentum. The second filter is the price momentum. And these are the momentum indicators, the directional movements of the momentum of the market. When the market trades above the indicator, in this case 1807, 1799, it is bullish. You're coming in this week with a bullish sentiment. And it gives you an alternate count, once again, that you can use as a protective level. In this case, 1807, stop, and it tells you. Negates this bullishness, neutral. So the first level that you can use as a protective level is the 1807 and go neutral because it will neutralize this bullish price momentum. And if you have multiple positions, for example, you can use the first filter, which is 1799. And that is the bigger trend. That's the 9 weekly simple moving average that we use. The 1807 is the average or the mean. So now we have a sentiment, the bullish price momentum, and a stop where it will negate this bullishness. Also, it tells you if long take profits 1836 to 1851 as we come into this week. So let's take a look at the current market. And so far, the high this week has been 1822.60, not quite reaching the target. So it is still in a bullish price momentum, and our protective level is 1807. Let's take a look at the silver report. As of August 27, 2021, with the market closing at 24.11, we came in with a bullish trend momentum. Closing above the average, the VCPMI of 2374, we came in with a bullish price momentum, and the targets automatically are activated of 2452 to 2495. If we close below 2374, it's going to negate this bullishness to neutral. So we have activated a bullish price momentum, and the targets are automatically in place. 2432 so far is the high today. $24.52 is the weekly target. But we have completed, as you can see, the daily targets in between, which are 24.19, and the next target has been activated at 24.45. Let's take a look at Bitcoin. The market on Friday closed at 48,932, above the 9-week simple moving average of 39,963. Therefore, we came in with a bullish sentiment. The VCPMI was 48,697, which was also bullish. So coming into this week, 48,697 is your stop level that you can use for Bitcoin. And the targets are 51,083 to 53,122. So what you see here is that Bitcoin came down into the buy one level weekly a couple of times. It got up to the average price of 48,697 on the 30th, and it reverted from this level at about 3 p.m. And what made it, or what's making it really interesting, is that the price is trading in between or below the weekly and the daily average price. It activated a bearish trigger point on the 30th, about 4 p.m. It came down to the buy one, reverted right back up again above the mean, got up above the mean slightly into 48,042, and it reverted right down again. And this is a very good example when the AI suggests that when the price is trading around the mean, that you basically stay neutral. It's going to get choppy, and until the market defines its extreme levels above or below, it's going to get choppy. So what you see here is the market reverting from the sell one level into the weekly buy one level, reverting back up again above the daily average, reverting down again into the weekly buy one level for a second time, and it's reverted from there back up into the average price. That's a pretty choppy market that we've been trading since pretty much the last just a couple of days. What ideally we want to see in this market right now, it seems to be in a neutral position. The trend is neutral. Is either the market reach up or move above the average price of 48,697, or come down into that